Do you personally expect a recession?
I am going to defer to my economist at this point, but I think probably that's a likely outcome. Normally, I don't pay that much attention to anecdotes, but you heard them. They're real. I hear it from just everybody now. Going to cut back a little bit. I'm going to wait, see what happens. That is kind of recessionary talk. So, we've been in this kind of very soft landing for a long time. Consumers have money, they were spending money, corporate is making profits. I do remind people part of that was because of our extraordinary fiscal spending. We borrowed and spent $11 trillion since COVID. And that obviously drives a lot of growth. It drives corporate profits. So I think what you're going to see now is corporations making announcement after announcement about, don't expect my guidance to be true. I'm going to hold back here a little bit. These are long-term decisions they have to make. They may want to see the tax bill, which, hopefully they can get done in July. So yeah, I think you're going to see a slowdown. I think the economists are probably right to say that you should expect that. And the other thing, which we haven't had any slowdown or real recession, and COVID was so short, I almost don't include it, and so long that if you have rates going up a little bit, and inflation is sticky, and credit spreads are gapping out, which they're going to, I think you'll see more credit problems than people have seen in a long time. I always remind people, markets aren't always right, but sometimes they are right. And I think this time they are right because they're just pricing in uncertainty at the macro level and uncertainty at the micro level, the actual company level. And then how it affects consumer sentiment, it's hard to tell. Consumers still have jobs. Wages are going up at the low end, which I think is a good thing. But if companies start cutting back, yeah, the consumer sentiment changes and business sentiment changes. I think you've already seen business sentiment change a little bit. Hopefully, no one's wishing for that, but hopefully if there is one, it'll be short. But I do think fixing these tariff issues and trade issues would be a good thing to do. That will get one major uncertainty behind us. We have the strongest economy in the world. It would be good not to add to the uncertainty out there. Trade is really complicated. These trade agreements are thousands of pages long. It is product by product and area by area, non-trade barriers, subsidies. There's tons of food. If you spend time with just food alone, you'd be shocked how many different food agreements there are and disagreements and protection of local farmers, which almost every country does. So the sooner, the better. They should get at it. That just slows everything down. And so that's the bad part of these volatile markets. It's not that it's bad for us. It's bad for small businesses, middle-sized companies. Large companies can usually get the funding they need. Well, it's nothing like '08 in clarity, and the 2000 dot-com thing was very brief. It lasted like 9 months or something like that. So it doesn't compare to that. The world was massively over-leveraged. There was a mortgage problem. You're going to have, $500 billion or maybe $1 trillion of actual real problems. The banking system's not that leveraged today, but it's serious. And it was serious before the last election. We have a huge, complex geopolitical situation, huge fiscal deficits, not just here, but around the world, sticky inflation, which I personally think will not go away so quick. And then you have, what's going to happen to tariffs, what's going to happen to trade, what's going to happen. So, tariffs and trade are just part of that mix. They don't completely stand alone. I think it is perfectly reasonable for someone to say that trade was unfair. There were unfair trade things. And remember, it's not just tariffs. It's tariffs. I think they have the VAT wrong, how they understand it. And I think they should really get a better understanding to make it easy to negotiate. But there are all these non-tariff barriers around food and energy, and then subsidies, which, China is famous for. So it's totally reasonable to say we want to make trade better. But I also want to point out to the Americans, we have the best economy in the world. Our GDP per person is $85,000. China's is $15,000. So you got to put a little bit in the context. And then, of course, when they put the tariffs in, it was way beyond what people expected. That will cause a little inflation, slow down growth. But I hope what they really do is let Scott Bessent, who I think is a professional, negotiate. I know Japan's here, I gather Korea, Vietnam have called, and then eventually Europe. Get those things done quickly. If you want to calm down the markets, show progress in those things, and let Scott take the time. Trade deals are very large and very complex. They can't be done overnight, but you really have to have teams working on them to get them right. I'm taking a calm view, but I think it could get worse if we don't make some progress here. And of course, trade wars, you saw China raise their rates today, and people are going to get angry and they're going to have responses, and every country's got choices. So there are short-term choices, there are long-term choices. And I also want to point out, if you kind of look forward in the next, 60 days, every company is going to be telling you guys, what it means to them. I think today I saw Delta remove their guidance. And things like that will affect stock prices again. It's not over yet. And then you've seen tremendous moves in swap prices, asset prices, treasury prices. There's a 10-year treasury auction today and how they go. So let them settle down, take a deep breath, negotiate some trade deals. That's the best thing they can do. You have a lot of deleveraging hedge funds and players out there, which he obviously is quite experienced in things like that. And that is the initial effect. There will be other effects, and we still are the reserve currency, which will be true for a long time. But a very important point, China and Russia have made it clear they want to kind of dismantle the post-World War II system. And I think the goal of all this trade stuff should be to make Europe and our trading partners, Japan, Korea, Philippines, stronger, not weaker, bring them closer as we build up our military. And any trade that protects military, that we should definitely do. We made a lot of mistakes about, as you know, pharmaceuticals, shipping, pharmaceutical ingredients, penicillin. We can't rely on any potential adversary for things we need for our military. And so, there I'm quite sympathetic. That we should do, that's absolutely paramount. We need to do that for rare earths, pharmaceutical devices, semiconductor chips. We should do it right. I mean, we shouldn't do it in a way that wastes a lot of money and lets corporations feed at that great tax trough or something like that. And it could be done, but it will take years. That we need to start right away. Even some of these other supply chains, a lot of companies are too reliant on one country. It'll take them to move. But I think you got to separate, making sneakers from making guns. One is like really important. One is, it's not as big a deal. So, but the point about national security is economic security, national security are almost directly related in the long run. Hopefully when these wars get resolved, and I hope in the interest of Ukraine, where they have sovereignty when it's over, and the interest of Israel, and not being constantly attacked by terrorists on three sides, you need to keep the economic alliance together. I think it would be in Russia's and North Korea's, Iran's, and China's interest to fragment the Western world. And I think that would be the biggest long-term mistake, and I'm talking about over 30 or 40 years. I don't want to read the book about how the West was lost. There's a section in my chairman's letter about China. I think China, in reality, has done a lot of good things for its own nation. I don't agree with autocratic dictatorships, etc., but they lifted a nation that had a GDP per person of $400 to $15,000. That compares to $85,000 of America. There are legitimate complaints that people have around China. Like if you look at their neighborhood, very complex neighborhood, but they are scaring Japan, Korea, Indonesia, Vietnam, India, etc. And so, they should look at themselves and look at where the legitimate complaints about trade. A lot of nations around the world think that they've been dumping excess capacity on their nations, and they should look at all of that. And what I said in my letter is that America shouldn't be afraid. America has a wonderfully strong hand with all of our freedoms and prosperous nation, etc. I think we should work with our allies, which is exactly what China doesn't want. But I think China and America should engage. And, they've started to, but right now they're not talking very much. So I think the first thing you do when you sit down with anyone is, say, how's your family? What are your objectives? We all have common interests, and I don't want to get this tit for tat type of thing. I think adults should talk to each other and listen to each other and acknowledge when the other person is right, or at least has a good point. I don't think we have any engagement right now, but that can start tomorrow. It doesn't have to wait a year. It can start tomorrow. Just start with a phone call. Either president can assign it to someone to call them up and go see them. We've done that, with Iran, which I think is good. I think from the United States standpoint, my objective would be anything that relates to national security. Obviously, America should rely on itself or close allies for that. We didn't, and that's kind of a shame, and I'm surprised. Anything that's about really unfair trade, that should be dealt with. That's true with a lot of nations. There's a lot of unfair trade all over the place. This has been going on for 100 different years. But a lot of things don't matter as much, where you get your textiles made, your footwear, your furniture. So I think we should be clear-eyed about what we're trying to accomplish. And I also think we should do it with allies. I think if the Western world, I would want to negotiate eventually with Europe, with the UK, with Japan, Korea, Australia, Philippines, and have a very strong economic relationship, and also then face off with China and say, we want to trade with you, but here are the terms of trade that we all think are fair and reasonable. So I think the most important thing is that we don't read a book in 40 years, How the West Was Lost. And so I think it's one thing for any nation or the United States to say, I think this is unfair around trade, around the cost of military. I think there's some very good points, which I think Europe knows that they need to spend more on their military. But that does not mean we shouldn't have a military alliance with you all, Europe in general. And same with the economy. They need to do more. The GDP per person in Europe has dropped from something like 70% of America to like 50%. That's not sustainable. I think Europe has already recognized it needs to change its own rules, regulations, and guidelines. if they want to grow faster, and I think that's true. But it should be done with us. The goal should be, in my view, to strengthen Europe and get them closer, not to get them weaker and get them further. So I think fragmentation of the world is a bad idea, fragmentation of the Western world, and you can end up with the world looks like before World War I and World War II, where it's almost every nation for themselves, trying to figure out how they're going to protect themselves. And unfortunately, that might lead to proliferation of nuclear weapons. You know, Warren Buffett talks about the resiliency of America if you just invested in America. I think that's been true, but for any company here, and a lot of Western companies around the world, having a strong America has been good for them, and having a strong Western world has been good for them. So if that wasn't true, I think it would put us in a much more weakened state. I'm talking about over 40 or 50 years, not the next 3 years or so. I think the real issue is there's ongoing uncertainty around tariffs, potential retaliation, how you can restructure your manufacturing supply chains if you were able to do that. I think those things are far more important. And, you know, obviously there's dollar weakness and 10-year bond weakness. It was a result of that. But what happens in the short run is, of course, you have deleveraging. And that, you know, that may be somewhat over for now. We'll see. It was disorderly to the extent that it was a rapid move and stuff like that, but it wasn't. No, we saw most other markets were fine, but you know, credit spreads gapped out. If you look at what it means to the world, volatile markets, it's not bad for JP Morgan, but it is bad for the markets. And when markets are very volatile, it scares people. They tend to not want to be owners. Credit spreads did gap out considerably. That means every company raising money is paying more for the money in two ways. One is the absolute rates went up, and the second is credit spreads gapped out, and that, you know, will cause some additional stress and strain in the system. The U.S. is still the most prosperous nation the world's ever seen. It's still a haven because of that strength, the rule of law, the strength of America's economy, innovation, the growth. The United States military, which not just protects America, protects a good part of the Western world. So it's still very strong. But yes, a lot of this uncertainty is challenging that a little bit. So you can be reading about this nonstop until hopefully these tariff and trade wars settle down and go away, so people can say, I can rely on America. In my letter I wrote, America first is okay, but not America alone. And so if you talk about, again, I'm not worried about the markets as much as I am about keeping the Western world together, free and safe for democracy. And that, to me, means you want to strengthen the economic relationships. It's an unfairness, deal with it, but we should be careful. I mean, I don't think anyone should assume they have a divine right to success and therefore don't worry about it. I simply try to describe the world as it is. I describe the world I want. I got to deal with the world as it is. So, you know, we've had ups and downs before. We've had recessions before. I'm not as worried about that as I am about the bigger issue we've already spoke about. You never know the future. So if you're a business person, you know there might be a chance for recession. And I think it's almost a waste of time to constantly be doing that every single day. And when you build a company or a ship or you got to say, okay, I have to deal with this whole range of outcomes. You know, and I always say the economy is like the weather. It could be stormy, it could be sunny. You don't build your company saying, I can only survive under one way. I think some of these other uncertainties, okay, are material. And, you know, one has been there for years now, geopolitical. I think, you know, trade, tariffs, potential retaliation, the good news from deregulation. So there are all these things taking place. You know, will we settle Ukraine? Will we settle good settlement for the sovereignty of Ukraine, a good settlement for Israel? You know, something with Iran. I don't know. But I think all of those things create what you're saying is an abnormal amount of turbulence and kind of forecast and thing. And that might change how you invest your money. You're not saying I'm going to change it because of a potential recession. I might change it because I have a completely different point of view about the future. And, you know, we bank 80 million Americans and 6 million small businesses and cities, schools, states, hospitals, 100 countries. I think the health of those things is far more important than how I view the health of a JP Morgan or, quote, Wall Street. I do object to this Wall Street thing because who is Wall Street? You know, we're owned by veterans, retirees, pension plans, you know, all around the country. That's who I represent. And so when you say Wall Street, including all these investors, are you including the institutional investors who represent the veterans and the unions and the CalPERS and CalSTRS? It's symbiotic. Every time a big company makes a plant that hires 5,000 people, it hires 20, usually outside of that plant, of 20,000 people that appear in small business. And so to me, it's just a misnomer when you do it. But the health of the economy, if you grow the economy, I wrote in my letter, if we've grown at 3% a year over the last 20 years as opposed to 2%, that's $15,000 more of GDP. That would have lifted up all of society, and very importantly, the lower income side. And that's what people forget. If you grow the economy, they will benefit the most. When you shrink the economy, they actually get hurt the most. And so, to me, yeah, our goal should be getting the whole, now I wouldn't even say the middle class, all of it can do better if we do a good job managing these economies. Jobs are still there. Consumers don't have all the extra money from COVID, but they're still spending. It's hard to tell how much is buying forward because they're worried about tariffs, but car sales clearly went up in the last couple of weeks. But usually the consumer has stress when there's unemployment. So you're going to see that when I see that, and then you're going to see credit losses go up and home prices, all things be equal, come down versus what they might have been, et cetera. And businesses are still doing fine, and they're earning money, but I think all bets are off now. So what you're going to see in the next 3 or 4 months is company after company report its earnings. They're going to tell you what they think about what the tariffs do to them, sales, their consumers. You're going to hear some companies probably will feel they'll be in a lot of stress. Some may benefit from all this. So it's not clear, but I think you're going to see kind of in real time what people think about it. And there's not a business person I speak to who doesn't feel a little stressed trying to figure out what this all means. I always say with American exceptionalism, there's a really big but. And the but is that we borrowed since COVID for 5 years, we borrowed and spent $11 trillion. And that $11 trillion showed up in the hands of consumers. They had a lot of excess cash, credit losses came down, they spent a lot of that. It created some of the inflation, it created growth, it also created corporate profits. It's a big but. So, when we still have a deficit of $2 trillion a year, that's still a big but. Like when you're spending that kind of money, there's another side to that mountain, and there probably is. So yeah, I think America's exceptional, but it wasn't quite that exceptional. If Europe, for example, had borrowed another $1 trillion and spent it, their GDP probably would have been $1 trillion higher. But they would have that same but. They did the same thing, just not to the extent of the United States. So, but I think there was a little too much exuberance back then. I thought so at the time. And I think when they announced the Liberation Day tariffs, they were dramatically different than people expected. I mean, way off the table than what people expected. And that was shocking to the system. I mean, the global system, not just in the United States.